Hello traders, welcome to your daily market update for Thursday the 23rd of April 2015, and we've had a fair bit of data coming out over the last 24 hours, all worth noting as it's starting to generate some price action, and I think that tonight we've got a little bit more that the market's really going to be focusing on. It's all about the PMI data. Before we get into that, the Australian dollar yesterday seen a better than expected PMI on the initial look at the figures, but when you break it all down, it wasn't as good as the market really needed to push the Australian dollar higher. And then coming out earlier this morning, as you can see, the HSBC manufacturing was worse than expected, and I think that will weigh on the Australian dollar a little bit. We also had the New Zealand RBNZ come out and say that the next move for them could actually be a rate cut. And that really caused the currency pair to take a dive, and we'll have a look at that on the charts coming up. The Bank of England minutes was the highlight for yesterday's session, and that's where the market really seen an unchanged move, and that's no surprise to the interest rate in the short term, but the minutes were quite interesting. That's where the members were discussing that the low pound could be causing inflation to rise quicker than they expected, and that's very interesting and it's very important for the market, and that's why the pound continued to rally throughout the entire session, and I think it will continue. They mentioned that the next move will be a rate rise, so the market's really firming up and really taking those comments on board that the UK will be the next to raise rates after the US, and this is only going to add value to the currency pair. And I think it could make a run for $1.51, and we'll take a note on how the market reacts tonight on the retail sales and whether it actually continues the extension tonight. However, next week I think we'll start talking about the election risk, and I'll mention about how the election coming up could actually cause risk to the currency pair, and it has done in the past, and the reasons why. But for now, I don't see it's going to play into the chart, so there's no use boring you with those details. We finished off the session with the US housing market. It was better than expected, and the US dollar really appreciated that positive tone coming from the data, as we have seen some weak data of late, and that's what's caused the US dollar to take a pause on the big charge that it had going higher and higher on the expectations of an interest rate rise in the near future. So the better than expected housing is the first step to some positive data, and if we continue to see that, especially tonight, well then we could see that the US dollar take another move higher and really try to crack that 100 resistance level I'll show you soon. So coming up tonight's the PMIs. We'll be really focusing on the Euro PMIs in nearly a 2 hours time, and then the pound data. Following that, we have the US data. All this in this pocket here is really what's going to shape the market. And then tomorrow we have the Eurogroup meeting, and that's very important. As I mentioned yesterday, as Greece is going to apply for their bailout payment. And it's going to be very interesting to see whether they get it or not and how the market reacts. I think that the market will weigh on the euro should they not be awarded their payment. And we could see things get quite interesting moving into the weekend should that be the case. For now, the euro is in a consolidation band waiting for that meeting. If we have a look here at the US dollar, as you can see, we're just grinding higher here on a little bit better than expected data. As we continue to see that, I think we can continue to grind higher and test the 99. 100 is the major resistance level psychologically and technically, and I think that it's going to take something pretty big to break above that. So for now, I think we are range bound. But nonetheless, the data will affect the charts in the short term. If we have a look here, we'll start off with the New Zealand. As you can see on the daily chart, big sell-off on the RBNZ's comments there, and I think we could come down and make a charge for 75 cents. We'll see what happens with the US dollar tonight and continue on with its strength, and I think that we could see another 60 pip follow through down into testing 75 cents, and then the market would have priced in those comments, and from then on we'll wait and see what happens. The Australian dollar, on the other hand, we had the big bounce here from the CPI, but then we faded away as that didn't have enough legs, as the data wasn't as good as what the market really wanted, and the US session seeing the US dollar pick up a little bit momentum, and right now we're just holding, and I think a break below 77 cents could really open it up to the downside, and then we've got 78.5 cents really needs to be broken before we can move to the upside. The euro is really starting to just wait on the comments from Greece, and we'll wait and see what happens tonight with the PMI data, as that's really going to affect how we operate here on the daily chart, and whether the price action can actually move below these lows. I think that we are going to be somewhat range bound until the Eurogroup meeting, and then things could really heat up and we could see some volatility in the euro pair. The Great British Pound has had the boost from those comments from the Bank of England's minutes, and I think that we will see a run for $1.51 and possibly $1.51.5. This is a long-term downtrend line. If I zoom right out here, you can see the big long downtrend, and I think the market will stall before it actually breaks that of any significant level, especially this old historical resistance level. So for now, we will wait and see. If the data comes out strong tonight with the retail sales, I think we will push higher, and we'll wait and see what the market has in store for us there. But I think $1.51 is going to be in danger. Sorry, there we go. We've refreshed on my fantastic internet at the moment. We've had bad storms here in Australia, and the internet's been quite slow. So we've seen a rally, and I think that we will push up and test $1.51, and then in this area here we could start to see some resistance kick back in, and then next week we'll start discussing the political risks of the election. US dollar versus the CAD. Now the Canadian dollar, we did have a bounce, and as you can see here, I'll zoom in for you. We did find resistance at the whole round number of $1.23. If I go to a 4-hourly chart, you can see that in a little bit better fashion. I'll go to a 1-hourly. Let me see here. Yeah, so we rejected the price here in the 4-hourly chart at $1.23, and then we've consolidated ever since. Right now, we're between $1.22 and $1.23. It's up to oil and the US dollar to really point us in the next direction. And I think tonight's data is really going to decide where we go to from here. And off the back of that, we could see some continuation there. Now, the US dollar versus the Japanese yen, we've seen a bounce as the bond market starts to get a little bit more excited than the currency market, but it's just playing catch up because we had some moments there where the currency market was moving, but not really the bond market. But we're starting to see with positive data the bond market get more excited, and that's being reflected here in a nice bounce. And we're up testing $1.20. A break above $1.20 would be really nice and really positive for the pair, but then we're seeing the next resistance level, which to be broken is going to need a little bit more positive data than what we've currently been getting. Well, that's it from me tonight. Keep an eye on the PMIs. I'll be on Twitter, and I'll be talking about how the data rolls out and what it's going to affect. And trade well, and I'll be back again tomorrow.